No credit, bad credit, busted credit? Well, we can't really help you. It's a talk show. But I will bring on my good friend Jason Kaplan from the Credit Pros talking about credit. This episode of the G.L.O Show. This week on the G.L.O Show, we're talking credit. Credit is incredibly important for qualifying for the mortgages that we all need to buy real estate, or the buyers of our property when we're done rehabbing. Happy to welcome Jason Kaplan from the Credit Pros. Jason.
It's a pleasure to be here, Chris.
So Jason used to have a radio show, and he had me on as a guest a couple of years ago, so I was really happy to have him come back and return the favor. So, Jason, tell me a little bit about the Credit Pros.
Well, the Credit Pros, I've been doing credit law because I'm an attorney since 2004. But about 6 years ago, we saw a major need in the economy for people and their credit.
We're buying and we're rehabbing properties. But now we need an end buyer for that property. And one thing that we run into is sometimes we've got a buyer, they want that property, but their credit score is just not good enough to qualify for that mortgage. How would you help?
Well, what happens is there's a lot of laws out there that deal with the credit reporting aspect of credit reports. So in simplest terms, the easiest way to raise someone's credit is to help them improve the positive items and then to get rid of the negative items. We deal a lot with investors and even rent to own because in order to have the cash flow for their property, they usually put their tenant in, and in the meantime, we'll repair their credit over the course of several months so that they can actually buy the property.
Do you deal with a lot of individuals who were recently foreclosed upon?
That happens a lot, and the problem is even loan modifications is the same thing.
Absolutely.
You know, you get a lot of mortgage lates, and even if you modify the loan, you're still, even though it hasn't foreclosed upon, you still have late payments across the board on your credit report. So it's a major issue now in today's economy dealing with foreclosures and loan modifications. But luckily, the laws out there are helpful and they can protect the consumer. And a lot of times, even though you actually paid late, it doesn't mean that it's reporting properly on the credit.
Gotcha.
The late payment amounts may be wrong, the dates of the late payments may be wrong, so it is possible to remove things from the credit report, not that you never paid late, but the actual specifications of the late payment is incorrect.
So you're able to review the credit report, identify those opportunities to pump up those scores, and then you challenge directly with the credit bureaus?
Absolutely. Well, in my office, we not only challenge with the credit bureaus, but we also challenge directly to the creditor on my letterhead, because obviously getting a letter from an ESQ is a little bit better than the layman that goes through the bureau. So I'd rather take out the third party. But it goes with anything on a credit report: collections, late payments, foreclosures, judgments, liens. Everything on a credit report needs to be 100% accurate, identifiable, and verifiable, as well as timely. So it's not so much did it or did not happen, it's is the reporting actually appropriate as for according to the law.
Excellent. Now, you said you do a lot of work with real estate investors. Talk to me more about these real estate investors and how do they utilize your services specifically?
Well, we touched on one way that they do it. You know, they all want to sell properties. A lot of times the end user does not credit worthy. So they might have someone who's capable or interested in buying a property, but actually not capable of buying the property. So in that aspect, we'll work on someone's credit. We'll make sure they come back to the investor in a timely manner so they can actually purchase the property. Another way to do it is the investor himself wants to buy property.
Right.
And a lot of times they're not able to close on a loan because of the different qualifications depending on what type of mortgage they have. So everyone who comes to my office is different, like a credit report's like a fingerprint. So we review the credit report and we figure out exactly what needs to be removed from the credit report, as well as give people some advice onto what they can do to improve their credit score. Because a lot of times you can raise your credit score just with a few proactive steps.
Yes, and we talk a lot about cash flow and the importance of cash flow and interest rates and mortgages. Your credit score often is directly tied to what interest rate you're able to get. So having a slightly higher credit score could make a property cash flow or not cash flow based upon just what that score is.
Oh, absolutely. You're talking about tens of thousands of dollars if you're between a 3.5% interest rate and a 6.5% interest rate. And over the course of a 15 to 30 year amortizing mortgage, hundreds and hundreds of thousands of dollars.
Your credit profile helps you not just on the residential, but it's also important on commercial mortgages too. I know you help people out with business credit.
Business credit is a completely different animal than consumer credit. And the issue with business credit is that there are no federal laws that regulate it. If a consumer comes to me with problems, we have the Fair Credit Reporting Act, the Fair Debt Collection Practices Act, various state and federal laws that you can use. And the problem with business credit, or the difficulty about it, is not only do people not know the function of it, but there are no laws to research. It's basically just understanding how Dun & Bradstreet works, what it means to get a business number, and then from there you can go ahead and develop a credit report for a business.
I've got a very good friend named Joe Lawrence. He's spoken here before, and he specializes on building business credit. But I'd love to hear a little bit more of your perspective on the importance of business credit and how that process works.
Well, the major thing with business credit is a business or a corporation is typically a separate entity from someone else. So if you have good business credit, you're not going to have to sign personally and guarantee the loan that you take out. Whereas most of the time, even if you sign for a commercial mortgage based upon your company, you're still going to be held personally liable.
Recourse
for
versus
that loan.
non-recourse.
Exactly. Recourse versus non-recourse. So what ends up happening is, as long as you go through the proper procedures and you're able to develop a D&B number and business credit, typically with a score of about 180 or higher, you're going to be able to sign for those non-recourse loans. And then you can actually go out there and deal and take advantage of the entity that is a corporation. Because that's exactly why people go into business and they don't become sole proprietors and own a property as Chris Goodson.
Yes. I have a bunch of different companies. Some say I'm addicted to opening them up. So I love starting companies. And each one of those companies, I go out and I get my D&B number and I open up a credit card that I know reports back to Dun & Bradstreet, because some do and some don't. Now, I know a lot of the real estate investors out there who are watching this saying, I don't need my personal credit. I'm doing real estate investing fine without it. I'm buying properties, I'm using hard money, I'm flipping properties. But at some point, if you follow my formula, you're going to need to buy and hold. So buy, rehab, flip, buy, rehab, flip. But remember, Christopher Goodson always says, when you find that gem, you want to take that property and put it in your pocket and keep it for the long term. In order to make that property cash flow correctly, you need the Fannie, Freddie, FHA lenders out there, just because they're the only ones that have the low rates that make those properties cash flow. Low interest rates equals more cash flow. Higher your credit score, the lower the interest rate you can get, the higher the cash flow. The secret to long-term wealth is a buy and hold strategy. Lots of money is being made buying and rehabbing and flipping and assigning, and that's all good. But at some point, you're going to need that high credit score, because you're going to need to build that portfolio to leave to your kids.
Absolutely.
And I'm going to keep on recommending people to you. I want you to come to my New Jersey Real Estate Investment Club, help my clients and help our members keep those credit scores high so that we can spend this next year building long-term buy and hold portfolios. Deal?
Thank you very much, Chris. Deal.
Very good. Thanks.
Damn, Chris, my credit sucks. Well, I'm bringing on Jason Kaplan from the Credit Pros. We're going to help you out. Next G.L.O. show.